Welcome, dear traders. You are watching a recap of the Asian session. Today, trading kicked off on a pessimistic note, following the worrying news from world markets yesterday. Japanese stock indexes retreated after opening in the green zone. They snapped their four-session winning streak. Stocks in Australia also dropped after a 5-day rally, closing Wednesday with losses. Only the New Zealand stock market has been growing for the second day in a row. So stocks reached the highest levels since April 2022. As the earnings season is in a full swing, the revenue results of the companies have a big impact on the market sentiment, yet it's now rather mixed. Traders are still optimistic about the policy reversal by the Fed. Hopes for a softer stance renewed amid a sharp slowdown in inflation and wage growth, as well as recent dovish comments by Fed's policymakers. US GDP data and the PCE price index are on tap today and tomorrow, and GDP is a lagging indicator. Therefore, its impact on the market sentiment is likely to be muted, so investors could simply ignore it. There is still a chance for a surge in the volatility. However, according to the VIX index, it's very low. In the Asian session, it decreased to 19.1 points. If the index settles at 20 and below, it indicates a long-term uptrend in the stock markets. The next week is likely to be more volatile. The US will release the Consumer Confidence Index, the ISM Manufacturing PMI Index, and the non-farm payrolls report. Apart from that, the Fed will announce its rate decision. So the main market moving events are still ahead. This is why traders are unlikely to make some crucial decisions today or tomorrow. However, if a GDP shows a significant drop, recession fears may intensify. If so, it will significantly hurt stocks and the US dollar as a safe haven asset. Investors are tired of the US currency's narrow range. They are looking forward to the release of a macro stats. However, the greenback rose amid news from Canada. Yesterday, the Bank of Canada raised the interest rate by a quarter percentage point and announced the end of the tightening cycle. Nobody was surprised by such a rate hike. However, the announcement caught the speculators off guard. Now, investors believe that other central banks may follow suit. The US dollar took advantage of a fall in the Canadian dollar, rising to 102 points. However, the greenback failed to settle at this level yesterday. In the Asian session, it was trading lower at 101.60. It also made an attempt to consolidate in the daily range of 101.50 and 101.70. Like many other currencies in the basket, the yen is trying too hard to resume a steady movement. However, the bearish trend was prevailed for more than 2 months. Speculators stick to the carry trade strategy and it adversely affects the dollar-yen pair. The spread between the US government bond yields and the Japanese ones has been a strong driver for the pair until November last year. However, the strategy of making a profit from the difference in interest rates between the Bank of Japan and the Fed is not effective anymore. It's likely to become even less popular after the Bank of Canada announced the end of rate increases. Apart from that, the Bank of Japan is likely to revise its ultra-soft stance. Risk appetite is the main reason for a rise or a decline in the pair. It's a high. The greenback dips and the yen grows immediately. A similar situation took place today. Yen bulls pushed the pair to 121.60. Today, the pair was able to recoup losses after a 2-day losing streak, moving in the daily range of 129 and 129.70. Overall, the Japanese currency is aiming at high levels, which could lead to volatility. Trading floors in Australia are closed today on the occasion of the holiday in the country. However, the Australian currency largely reacts to external events. Today, they were extremely positive. Following the reopening of the Hong Kong Stock Exchange after the 5-day holiday and the head of the US GDP data, the Aussie managed to break above the psychologically important resistance level of 0.7100. Soaring inflation in Australia may force the Reserve Bank of Australia to hike rates more aggressively again. Given the regulator's previous remarks about the policy reversal, raising the benchmark rate even by a quarter percentage point could look like a hawkish move. In the Asian session, the AUD-USD pair was trading near a 5-month high of a 0.7120. It has been growing for 5 days in a row. Apparently, 5 is a lucky number for the bulls this week. In the morning, the pair was moving in the bullish corridor of a 0.1792 and 0.7129. The Kiwi, which started trading on Thursday near 0.6494, managed to climb. Like the Australian dollar, it was up mainly amid rising oil prices. However, the main drivers are political changes in the country as well as a galloping inflation. Perhaps it will force the Reserve Bank of New Zealand to become more aggressive. The NZD-USD pair was moving in the upward channel of a 0.6470 and 0.6500 amid such expectations. Fresh macro stats are sure to influence market sentiment. Hit the subscribe button and don't miss our new video reviews. Leave your comments down below and see you soon.